Hi, Trevor.
Hi, Lynea.
How are you?
I'm great. How are you?
Good. Okay, so I want to answer the question that I'm hearing a lot right now, and that is, I help people sell houses all the time. So if I own a house and I want to buy a new house, how do I do it? Should I sell my house first? Should I buy my house first? How do I finance that? What is that? How do we do that, right? And so I know that something that's really, really popular right now and really helpful a lot of my clients, I know you have some really good stories about it, is a bridge loan. So I wanted to talk to you a little bit more about that. Can you help us explain what is a bridge loan? Why would I use it? When would I use it? What's it going to cost me? All that good stuff.
Yeah, I'd love to talk about that.
Love it.
So in the past, a common problem that families would run into is that they'd own a home with equity in that home, and they want to buy a new house for whatever reason. And that may be a more expensive house. It may be that they're moving, or it may be that they're moving down. So if the buyer can come up with enough down payment for the next home and qualifies for both mortgage payments at the same time, that's a pretty simple solution, but that's not always the case. So then the options may have been that they have to sell their home first and then get that money and then use it as down payment on the next home, which works fine, except for that means that you have to move twice, and that's stressful and it's expensive and time consuming.
Right. And I have this, so I've always been kind of the one, I have this, what I call my proprietary move once formula. And it's always been really helpful, but it doesn't always work. So my move once formula allows the seller to essentially move once, surprise, surprise, but it allows people to move once, and sometimes it doesn't work because it does involve getting the buyer to sign on to it, right? And so while it is a great option and it has worked for a lot of people, it doesn't always work. So it's good to have other solutions. So talk to me more about that piece.
Sure. So a traditional bridge loan was kind of complicated and kind of expensive. Think of it as it bridges between one house and the next house. Okay. So it would work for somebody that has a lot of equity in their home, and it essentially gives them the down payment secured by the home that they already own that has a lot of equity. Problem with it was really expensive. It put a lien or a loan on both properties, and then there was payment on it. So then after they moved into the new home and then sold the old home, the bridge loan would get paid down, and then they'd have to refinance the new home. So also 2 closings, 2 escrows, 2 sets of closing costs. So there's now another solution, and it's a next generation bridge loan. So the next generation bridge loan works like this.
Okay.
For somebody that has equity in the home that they have now and they want to buy the next house,
right,
we take a look at the value of their current home and their mortgage balance, and we come up with an amount that we can advance them.
Okay.
And that's going to be a loan on that home. It'll be a second loan on that home, but it's 0 interest, no payment. Okay, so we established that first.
So the second loan has 0 interest, no payment.
Yeah, that's the bridge loan.
Okay. So the second loan, and it used to be that, like, previously, this is why it's the next gen bridge loan, but it used to be that second bridge loan or that second loan would have a higher interest rate than, say, your first mortgage. So, even 3 years ago, I know that people were doing bridge loans because it was a seller's market and you needed to have something like that, right? So people could write a non-contingent offer. But the downside to it was that interest rates were at 4% or even less, and the bridge loan was at 8%.
Or higher.
Yeah. And so now you're just paying you're paying that mortgage, whatever that first mortgage rate is, 6%, 5%, 2%, who knows, right? Whatever it is, but you're not paying interest on that second loan.
Right.
Okay.
You're not paying interest on that second loan. So we establish how much that loan amount is going to be, and then that money can be used for down payment and settlement costs on the next house. It can even be used to pay off debt at closing if debt needs to be paid off to qualify for a higher loan amount. And we can even set aside $35,000 that can be used to prepare your old home to be listed after closing.
And no interest on that money either.
No interest on that money. So now we've got this solution where we go, okay, you've got a lot of equity in your home. Here, we're going to advance that to you, and here's your down payment funds for the next home. That's part of it. But the next super cool part is that you only have to qualify for the payment on the next house.
So at the higher, so it's for people who refinance in the last couple of years, it's probably going to be a higher interest rate payment, but that's the only payment they have to qualify on, rather than having to be the 2 payments.
Right.
Which is still a better deal than the original.
It makes life really simple.
Right.
So now let's say you are moving up. You're moving into a bigger home. You only have to qualify for the payment on the new house. We provide the bridge loan funds for down payment on the new house.
Mm-hmm.
And here's one more really cool feature of the plan. Built into that bridge loan, you don't have to worry about making a payment on your old house for 6 months. And here's why. We make sure that there's enough money in that bridge loan that every month we pre-fund the mortgage payment on the old house. Let's say your payment on your current house is $3,000 a month.
Okay.
We're going to make sure that we set aside $18,000.
Okay.
6 months of payments.
So it's from that money that you're lending.
Yeah, the interest-free bridge loan.
Interesting.
We're going to set that money aside.
Okay.
And then every month we actually send that money back into your bank account. So you don't have to worry about there being money there to make 2 mortgage payments.
So then my question, that probably a question a lot of people are asking, is what's the catch? How does it work if you, because as a bank, as a lender, you make money on interest. That's how you make your money.
Yep.
So where is that coming from?
Yeah,
is that
where's it come from?
fees? Is that fees in the front end? Like what is that? How does that work?
Mm-hmm. So the mortgage on the new house that you're moving into, that's just a regular mortgage. Say a 30-year fixed rate mortgage at whatever interest rates are today, which are currently in the low to upper 7s, depending on the circumstances and when we lock. For the bridge loan, the cost of the bridge loan is 2% of the estimated list price of the home, or $15,000, whichever is less. So if you're selling a home that it's the estimated sales price is going to be $600,000, the contract fee on the bridge loan is $12,000. That's not money that homeowner has to come up with when they take out the bridge loan. That fee comes out of their proceeds when they sell.
Got it. Okay. Can you show us the math?
I'd love to.
Okay, let's go. Let's show the math.
I'm going to run through an example of the equity advance bridge loan.
Okay.
So let's say that you own a home and it's worth $700,000. And you owe $400,000 on this house. The home that you want to purchase is $900,000. With the bridge loan, let's say that we provide $100,000 that you can use as down payment on the new house. This is the bridge loan. It is 0 interest and 0 payment. That's payment and 0% interest. So the $100,000 you're going to use as the down payment on the $900,000 house.
Okay.
$100,000 down, and you're going to borrow $800,000. So here's what we've accomplished. We've provided down payment funds in the form of a 0 interest, 0 payment bridge loan. You're a non-contingent buyer, so you've closed on your new home at $900,000. You've only moved once, and now this home that you're going to be listing, it's a vacant home. Your real estate agent can stage it and sell it for top dollar, and now you've got 6 months on a 0 payment, 0 interest bridge loan. And here's one of the coolest parts of the program. You only have to qualify for the $800,000 payment. And this bridge loan also has a feature where we, in addition to the amount that you're using for down payment, we set aside the equivalent of 6 months of payments on your old home so that you don't have to worry about making mortgages on both homes for 6 months.
Okay, so Trevor, one of the things that I saw in your math there that I really liked was the purchase offer, right? So part of what I offer in my dream method is essentially a guaranteed sale, right? If you cannot sell your home, we are going to guarantee that we will buy it from you. So that's not to say that we're going to buy your, like, the guaranteed sale program is not saying we're going to offer you way more than market value. That's not what it's saying. It is essentially telling you that if your house doesn't sell, then we're going to buy it for you for what we consider to be a fair value at that time. And so I think that that's what I would kind of pulled out of that. Whereas with my dream method, it coincides with that perfectly, right? Because I want people to be able to have the life that they want. And in most cases, the life that you want begins at home. In most cases, everyone that I know, their life, that's why people buy houses. I bought my first house because I wanted to own a house, right? And then you buy this house and you get to make it your own. And then, you know, as you get older, you know, and you start to grow, you become a little bit more experienced in your career, you start to have families, you start to travel the world, your tastes start to change, right? So the house that you bought 10 years ago, 5 years ago even, is not the same, it's not for the same person you are today. So your house needs to suit that. So for me, I want to be able to make that possible for people without all of the excuses and all of the external factors that we can't control. So I think that's what I took from that is, you know, we have options, right? So if you are looking to sell your house and buy a house, there are so many options out there for you. And they're not the options that people are, I think, used to hearing.
Yeah, what I love about the Dream program is it really simplifies the process. Because families are busy, everyone's busy, and moving twice is a roadblock that keeps a lot of people from moving forward with life and moving into that next home.
Yeah.
So this is a solution that allows a family to move from the home that they're in into the home that they want to be in without moving twice, and it solves the financial problem really cost effectively.
Yep, agreed. So thank you, Trevor, for being here. Okay, how can people get a hold of you if they have any questions?
Online at nfmlending.com/T Bennett. That's NFM, Nancy Frank Mary. Or call or text 425-318-1483, 425-318-1483.
And I'll also put Trevor's contact information below for you. I'm Lynea Carver. Thanks so much. If you like what you're seeing today, make sure you hit that little subscribe button so you can stay in tune with everything that I post in the future. See you later.